Hi, welcome to Speak Fortunes. Now before we begin, remember to like, subscribe and tap the bell icon. You don't want to miss out on any update from Speak Fortunes. Who would have imagined that a company worth $32 billion can collapse in less than an hour? That's exactly what happened when FTX, one of the biggest cryptocurrency exchanges in the world, declared bankruptcy on November 8, 2022, following the stepping down of its founder and CEO, Sam Bankman-fried, popularly called SBF. Not every detail of what happened is known, and a thorough investigation will be needed to find out the root cause of the collapse. But it appears that FTX used about $10 billion of its assets to bail out Alameda Research, a sister company. With everything going on, the crypto market, which was already in a terrible state, had plummeted even further. Many traders and investors have been left wondering what impact the crash will have on the cryptocurrency industry as a result. The cryptocurrency industry was already in a terrible state before the FTX meltdown. Bitcoin, which went from $69,000 to roughly $18,000 to $20,000, is a great example of how cryptocurrencies prices have fallen after reaching incredible highs in November 2021. Even still, investors, not traders, were the principal victims of this catastrophe. The market becomes extremely volatile after a crypto market meltdown, which presents traders with small capital the opportunity to make huge profit. From a purely trading standpoint, the FTX fall can be considered as a positive factor because it increased volatility. The prices of tokens fluctuate greatly throughout the day due to high volatility, and many traders profit from this. Traders who use free cryptocurrency trading apps like Bitcoiner are keeping an eye on the market and trading in line with the current trend. Most traders employ short positions when they notice that everything is falling, and long positions when they notice that large tokens are showing gains so they can make profit. Therefore, it is safe to conclude that day traders seem to gain the most from the FTX's crash. So what caused FTX to go bankrupt? Not too long ago, FTX was one of the biggest cryptocurrency trading platforms in the world. The cryptocurrency exchange, which is based in the Bahamas, was established in 2019 and has enjoyed a phenomenal rise to fame. It was valued at more than $30 billion earlier this year. Everything has changed during the last 4 weeks. First, there were issues with FTX's connections to Alameda Research, an asset trading company, including rumors that clients' monies had been moved from FTX to Alameda. You probably live under a rock if you are watching this video and don't understand what we're talking about. Even if we lack a lot of inside information, the overall picture of this issue is this. It all started when CoinDesk published a piece on Alameda Research, a financial services provider controlled by Sam Bankman-fried, the CEO of FTX, which noted that the majority of Alameda Research's holdings are FTT tokens. What is FTT? FTT is a digital token produced by FTX that resembles cryptocurrencies like Bitcoin as a method to entice users to use their services by providing benefits linked with their tokens. Many crypto platforms now produce their own tokens. Tokens can therefore function on the platform like stocks. Blockchain technology is used by these digital tokens, which allows for the contribution of computers to a shared ledger that may be used to track digital assets. Bitcoin, the original blockchain initiative, relies on more computers competing with one another to build a distributed system that no single computer can control. However, not all cryptocurrencies, blockchains, or tokens operate in the same way, and many are no longer distributed as Bitcoin. A single entity can generate a token on a blockchain, just like FTX did with FTT, which it generated and distributed as rewards to users. Furthermore, FTT was less transparent than other tokens, making it difficult to ascertain the real number of tokens produced. Although trading was possible using FTT, it was not very widespread. Other platforms likewise kept the tokens in storage. Following the disclosure of Alameda's balance sheet, Changpeng Zhou, aka CZ, CEO of the cryptocurrency exchange Binance, a competitor of FTX, declared on November 6th that his company would be liquidating all of its FTT holdings, which are currently valued at more than $500 million. FTT's price fell drastically. As price fell, people began to withdraw all their money from FTX, which sparked a severe panic and led to a liquidity crisis. This demonstrated that FTX did not possess as many assets as they claimed, and it was also made evident that these assets were used to save Alameda Research. Sam Bankman-fried, the majority owner of both FTX and Alameda, earlier this year managed to save other struggling crypto companies. He is currently in desperate need of an investor with $8 billion to salvage his companies. Bankman-fried longed for a lifetime as hints of a larger crypto catastrophe loomed, trying to keep his enterprises afloat, and before the full scope of the disaster became apparent. CZ, one of the FTX's original investors, intervened to take on his former competitor. On November 8th, he declared that Binance will buy FTX for an undisclosed sum, thus acting as a bailout for the struggling company. However, Binance later withdrew out of the deal after evaluating the books. CZ, the CEO of Binance, cited information learned during the typical due diligence process that goes along with such agreements, as well as reports that FTX had improperly handled user funds, as justifications for Binance's prompt withdrawal. Numerous companies have already written off the value of their FTX shares. Finding investors who are willing to invest new cash will therefore not be easy for Bankman-fried. Due to this, FTX and SBF were left with little choice but to voluntarily initiate Chapter 11 procedures in the US and declare FTX and about 130 partner and sister enterprises insolvent. Now, how does the FTX collapse impact the cryptocurrency ecosystem? These incidents have significantly damaged trust in the cryptocurrency industry. Before this most recent crisis, the worth of cryptocurrencies had already fallen from a high of more than $3 trillion to $1 trillion. Now it has dropped even more. Although this fall may have some benefits for day traders, it is generally bad news for the cryptocurrency trading industry. This FTX crash has showed us that just because an exchange is the second largest cryptocurrency exchange does not guarantee that trading on it and storing your money there are fully safe. Traders began to question what safeguards other exchanges from experiencing the same thing as a result. Particularly in this desperate situation where exchanges like Crypto.com are already under criticism. According to The Guardian, the collapse of FTX was most heavily felt by institutional traders who had big FTX assets, as opposed to smaller institutional dealers who did not suffer sizable losses. However, given the current fall, there is a significant likelihood that these tiny traders will suffer from the crash's long-term impact as well. We should prepare for more stringent regulations governing Bitcoin trading and other forms of usage. And even though these institutional traders were already subject to some limitations, small retail traders who benefited from the lack of regulations might need to re-evaluate this market if restrictions are tightened and the advantages that this laxity in regulations offered are replaced with long-term safety. It is possible to draw the conclusion that the fall of FTX undoubtedly caused the cryptocurrency market to lose some of the investor confidence and acceptance. Regulation is still viewed as a practical mechanism that can give the digital market the framework and stability it requires to function more effectively and transparently. Investors need to be aware that there are a lot of risks involved in cryptocurrency market, which is quite volatile, and that caution must be exercised. What are the lessons here then? If you are an investor, only invest the amount you are willing to lose. This story also reveals how everything is possible when there is a bull market. Even the most knowledgeable expert gets infatuated with the thought of making millions. They are prepared to give a 30-year-old and his companions hundreds of millions of dollars despite their lack of experience or no experience at all. What do you think about this story, guys? Kindly share your thoughts in the comment section below. If you find value in this video, then support this channel by smashing the subscribe button and the bell icon. Also give this video a thumbs up. That's it on this video, guys. Till I come your way again, peace and love.